The topics of tariffs are not just obviously on crude oil, Mexican or Canadian, but we're now talking about reciprocal tariffs that Donald Trump wants to implement vis-a-vis partners who have tariffs that are higher than what the U.S. imposes on the import of their goods. And I think was it yesterday or this morning that we're now obviously having the idea that we may have a 25% tariff imposed on the European Union. Hello, welcome to Oil Insights. I'm your host, Harry Tchilinguirian, Head of Research at Onyx Capital Group. Today I'm joined by research associates Mita Chaturvedi and Vincent. Now, before we start the show, please like and subscribe to the podcast. I invite you to also visit Onyx's LinkedIn and YouTube channels for more interesting and exciting content. It's IE Week in London when the oil industry descends upon the city, congregating at different conferences and hospitality events, exchanging their views and impressions on the oil market. As you could probably tell from my voice, I've been actively engaging in a few of those parties and talking with a lot of people at multiple events, screaming at the top of my voice. Now, ahead of IE Week, data from the ICE exchange basically showed us that money managers were paring their net long positions on Brent futures, possibly because the predictability of the market's evolution has been considerably degraded. As IE Week unfolded, oil prices have come down, and at the time of this podcast, front-month ICE Brent futures was trading around $73.30. More impressively, perhaps, given all the uncertainty, is that volatility in Brent price has also come down. Oil volatility is below 20% on a realized basis over a rolling 30-day period, which is, trust me, well below the normal levels and counterintuitive given the current market environment. And this market environment could flip on its head from one day to the other with the latest of President Trump's whims. So while IE Week is not over yet, in this podcast, we wanted to share with you our first impressions and some of the recurring themes that we have been discussing with various people so far this week. And if we had to summarize them in 3 points, it's basically centered around Trump, tariffs, and sanctions. Very unsurprising themes. However, the implications that are drawn from each one of these themes at different locations and people, well, the implications vary quite a bit. So we're going to jump right into it, and we're going to start off with Iran, because at the end of the day, I think there's a lot of debate around maximum pressure on Iran, what it means. Is Trump just waving a big stick in order to get what he wants? Does he really want maximum pressure on Iran? So I've seen a number of people quoting various numbers, and somewhere between 500 KBD loss in oil exports to 1 million barrels a day. So guys, what were your impressions when you had discussions around Iran? Were people veering on the maximum pressure side, as in the US would definitely implement this, or maybe being a little bit more cautious around what will actually happen, right?
I think the first thing that everyone's really discussing, around me at least, was that does it really matter anymore? It definitely will. There definitely would be a bullish impact with the word sanctions, with the loss of 500 to 1 million barrels a day. But just in terms of US to Iran, just it's not really the same flow as we had back in 2018, back during Trump's first term. And I think we've discussed this on the podcast as well, with China buying more Iranian oil.
Yeah.
Of course, with the sanctions, I think it's important to realize how, I think with freight jumping up, or with just how the maneuvering of oil would be with, let's say, fewer, if dark fleets get impacted, for example. I think that would be interesting to look at. But on the other hand, you also have Trump wanting to lower energy prices. I think that's the first contradiction that comes to mind when you think of whether he's going to put maximum pressure on Iran, because that's going to, if that lifts up gasoline prices, that lifts up oil prices, that sort of contradicts what he's promised the American people. So it'll be interesting to see him in that weird seesaw, I guess, between geopolitically, just trying to get. I think he will try to get Iran to negotiate a nuclear deal. Before, I think that is his primary objective. Yeah. But yeah, it'll be interesting. I mean, it will be the carrot and stick thing, right? The stick being the sanctions. He'll have to put them on Iran if no deal comes up.
Yeah. So Vincent, have you heard sort of the same kind of thematic when you had discussions this week?
Yeah, quite similar to what Mita was saying, as in there's expectations that Trump administration will impose maximum pressure sanctions towards Iran, so at least limiting the Iranian crude exports compared to what it was under the Biden administration, perhaps as an offset against more flows of Russian crude, more Russian exports, and
So interesting. It's
yeah.
sort of like putting
Yeah.
Iran versus Russia. We'll get to Russia, but I mean,
Mm.
it's true that there is this overarching narrative about reducing inflation at home for Americans through lower energy prices and knocking out Iranian barrels when you don't have another producer with spare capacity that at least officially is willing to step up and fill the gap. That is a little bit odd. I personally think that Donald Trump is not looking for regime change in Iran, and Mita, you kind of alluded to this. If he gets an ironclad deal that Iran does not develop a nuclear weapon, and that appeases the Israelis, I think job done. He's happy. It's very transactional.
Yeah.
Live and let live. Just don't develop a nuke, right? And therefore, I will not sanction you on your oil, and you will continue to see Iranian oil flowing. And I think the other aspect that you were mentioning, like, are people concerned? Do they care? Well, yeah, the market has changed. You have a single buyer for Iranian crude, which is basically China. Why would China acquiesce? Now, we saw initially some issues around discharging at ports of vessels that were sanctioned, but at the end of the day, they just discharge elsewhere or
Market finds a
workarounds.
way.
Yeah, the oil finds a way. Now, I guess, before going to some of the more granular thematics on Russia, peace between Russia and Ukraine. So I think there was a pretty big divide in opinion as to whether this is going to take a long time or a short time. So if we really wanted to be controversial and say that Trump has been preparing this well ahead of his inauguration, then can we have peace within a month? At least a ceasefire, right? And then work out the details afterwards. A lot of people indicate that this is going to take a long time. And so, in my opinion, I think that this for President Trump would be a win, and he's been really moving very fast. We saw, the deal on rare earths in Ukraine coming forward quickly. Zelensky modulating his position relative to a potential departure, depending on security conditions. So, a lot of things are unfolding. Now, this doesn't mean that we'll get a truce, but Vincent, in your opinion and what you heard, are people leaning on the sooner rather than later or later rather than sooner sort of resolution to the situation in Ukraine?
I think I've heard a combination of both. No matter what, Russian crude and oil product flows will still be out there. The question is, how will that affect east-west differentials, as well as will euros make its way back into Europe? The question is, what sanctions will be on Russia will be lifted, and does that include the ones on the energy industry? So it seems that the US and the UK and Europe will have to be working together using the lifting of sanctions as kind of like a carrot, and kind of like a carrot and stick method with negotiations with Russia.
But how long does this take? This happened quick. So Europeans are not in the driver's seat. They're not even in the car, as a colleague of mine would say. And so maybe getting to the end point, whether Trump does it unilaterally by himself and brokers the peace. I mean, Mita, talking with people this week, have they been optimistic around a rapid resolution, or have they shown more reservation?
I think everyone's been so divided, but a few people that I spoke to were very much of the opinion that, so even when they agreed that, say, the US was probably, like, this may have been in the works for a while, this could not have been as, like, given how quickly, like, Putin came up and how the deal, like, the minerals deal in Ukraine, for example, a lot of people do think that this could maybe be really quick in the US, but some people have apprehensions or, like, a little more reserved about how soon all of the Eurozone is going to, like, go ahead and lift the sanctions as well. It'll be interesting to see, like, as Vincent mentioned, they'll all have to work together to lift these sanctions, but everyone is so divided right now. Some people want to deploy more troops to protect Ukraine. Some people are very much of the, yes, let's get a deal, all of this is great. All those people being Trump. But
so the timing of the deal is still very much up in the air as far as we don't have a consensus really on whether this is happening
I
right now or it's going to
Yeah.
happen in 6 months. But
Mm.
it seems that people have kind of moved ahead in the discussion. Let's say we assume that a peace deal is brokered. And now we get
Mhm.
to the whole aspect of sanctions that you guys were mentioning.
Mm.
And this idea that, let's say, the US dangles a carrot, they lift the sanctions, the UK follows. What are the G7 restrictions, and of course, of which the EU is part of?
Mm.
And one of the question marks was, well, how long can the EU hang on to sanctions, even as the US has removed them? And if they were to remove them as well, then what are the consequences? And I think a lot of discussions, Vincent kind of alluded to it, is around the reshuffling of oil flows. So does this have, in your view, Vincent, I mean, if we have reshuffling of crude flows, let's say,
Yeah.
where suddenly Urals make it back to Europe where it's needed, because the Europeans had to kind of plug the gap with lighter American crude during this entire period.
Mm.
And we saw the premiums of medium sours like Johan Sverdrup in the North Sea develop because that Urals was not there. But
Mhm.
let's say the Urals leaves India and comes back to Europe.
Yeah.
Consequences for Brent Dubai?
Yeah, so initially I'm inclined to think bearish for the Brent Dubai because there's more medium sour crude that's making its way into Europe, where previously the European refiners have been finding alternative grades such as WTI Midland as the marginal barrel. So if they take in more of that Russian crude, then perhaps there's less demand for the light sweet crude grades from the North Sea as well as North America. However, on the flip side, there's also a bullish scenario for Dubai crude, which, as you know, India has been taking a lot more Russian crudes, cheaper Russian crudes these days. And if Russian crude makes its way back to the market, that will be more competitive, making India source alternative Middle Eastern crude. So it could be a bullish scenario
So-
there.
So we could see, I mean, especially in light of OPEC plus continuing supply restraint, we're going to talk a little bit about that. But yeah, if the incremental bid in the Middle Eastern market is going to come from India because it loses this cheap source of oil, then it kind of makes sense that, the Europeans taking less TI Midland, going back to Urals, less pressure on Brent, more pressure on Dubai upwards, and we get a nice short Dubai, short Brent Dubai situation happening. Now, that's not the only thing about oil flows, of course. I mean, Mita, you and I were talking about the potential return of diesel into Europe. And I had an interesting discussion with somebody who was saying that even if Europe were to lift price caps and sanctions in terms of importing Russian product, somehow the product would not be purchased. I'm kind of of the view that the economics will win out if it's legal and Europe has a big short in diesel and you are able to bring it over. I was sort of debating the merits of what's the difference between sending Russian crude to India, having it refined there, only to send that diesel back this way. But if we get that Russian diesel back into Europe, I mean, this is paint a pretty bearish picture for cracks, at least on diesel.
For sure. I was actually thinking more in terms of the East-West, because even if you see now, the East-West is high enough for things to be, for the ARB to not necessarily work from the East into Europe. And just in like the very short term, you're gonna have refinery maintenance first in the East and then in Europe. That might bring further tightness in the East versus in NWE. And that could further make the ARB just like a bit more unworkable. And if you have more diesel going into the West from other sources, I just don't see the Asia to Northwest Europe ARB necessarily working if there isn't, if they're not getting Russian barrels and if the Russian diesel is going into Europe. So I guess that ARB economics would work better, as you said. And in terms of whether they'd buy it or not, I don't know necessarily. I mean, I definitely don't see I don't see the difference between getting India to buy those barrels and then sending them to Europe versus just buying them directly from Russia. I guess whatever's cheapest should, in my opinion, win out. But I guess, there's just so much political optic also involved in this.
Yeah.
So I guess that's something in the short term that we might see some pushback from a few players.
Well, it could be that the Europeans begrudgingly follow the U.S. and then for a time decide even though it may be legalized, so to speak, to bring back
I
Russian
actu-
product.
Yeah, I also
They
wonder.
may choose, they may
Yeah.
choose to ignore it, but I think typically the economics win out in the end, right?
I also wonder if any peace deal between this like with whatever Russia, this like Russia's. I don't think Russia's going to accept a peace deal that doesn't involve some lifting of sanctions in the deal itself. And I wonder if Europe's going to be involved in that, whether just like terms of how much Europe lifts would be involved in that. So I think that'd be interesting to see, like it'll be interesting to see how that plays out, whether they then have to be involved in it, whether Trump like threatens more tariffs.
I don't know. It's in terms of sequence of events, it's like obviously Vladimir Putin probably has a list of things that he would like to see happen: land concessions, barring Ukraine from NATO membership, etc., lifting of sanctions, of course. But if the U.S. were to lift sanctions unilaterally, then would Europe follow, or would he would like to see that at the same time? I don't know. But in any case, I mean, there's a lot more we could talk in terms of Russia. I think some of also the talking was that maybe, we're focusing a little bit too much on how much crude may come back or oil product may come back to Europe versus what natural gas will come back to Europe. So there was, in my discussions, a lot of people were emphasizing a more rapid return of natural gas, Russian natural gas to Europe, because Europe needs cheap gas for its industry. It needs a cheap gas for its refineries to make that hydrogen, to desulfurize products. So I don't know, it may be more of a gas story than an oil story, but since we're oil analysts, we're probably a little bit biased. But anyway, in terms of sanctions, we just also learned today that Trump is probably going to revoke Chevron's license to operate in Venezuela. And that kind of brings up an interesting point in terms of medium sour grades again. And I turn to the tariff topic that was that we mentioned earlier. I mean, here we are at the end of the month, almost, right? Are we going to see the U.S. impose tariffs on Canada and Mexico? Right?
This week.
Yeah.
Next week, yeah.
That was also in everybody's minds. Do we find a last-minute solution, or are people resigned to the fact that he's going to do it? What impressions did you get?
I think seems like people are resigned that he will continue to do it, whether there will be tariffs or not. There will always be the threat of tariffs dangling, even if a deal is reached. Maybe a few weeks later, a few months later, something else will happen. So there's just a heightened environment of this uncertainty and volatility. And for the crude flows, it's been quite interesting seeing other analysts talk about like how that will affect the interplay between like Canadian and Mexican crude going into the US, and under a tariff scenario, whether if perhaps TMX, Canada maximizing their TMX exports, will that affect how much of the Canadian oil goes into the US Gulf Coast to be exported, or with Mexican crude, if that goes elsewhere, then the marginal barrel for the US Gulf Coast might be coming from like Middle East or Latin America. So these are things I've heard a lot of speculation about these scenarios.
Yeah, assuming, of course, that President Trump doesn't impose a tariff on virtually the entire world. But I guess if he were to proceed with imposing tariffs on Canada and Mexico, and the latest tariff rate that he wanted to impose on Canadian crude was 10%. So I think we commented last time that if he goes ahead with that, then there's not much optionality for Canadian crude. So yes, they could max out on the TMX, but again, the volumes on that pipeline pale relative to the volumes that are shipped to the US. So I think the burden there is going to be mainly on Canadian producers. WCS will have to discount heavily. The refiners may pass on some of the costs of the tariffs to their consumers. So again, it doesn't seem to jive with this whole lower inflation through lower energy prices.
Yeah.
We still have that contradiction. But I guess this is not the first and last contradiction from Donald Trump.
We also, I mean, we might see, I think the recent conversation around the tariffs on Mexico and Canada, and crude specifically, was that, not crude specifically, but just like the tariffs that we're waiting for next week, is that he's going to go over he's going to look at different terms again at the start of next week and see whether they need to be postponed again by another month, which I think could happen. I do think he'd like, again, throw a few terms around and be all, oh, this is happening, this you've not done, get on a call with Claudia Sheinbaum and with Justin Trudeau and sort of I think it's going to eventually be postponed to April. But it'll be interesting to see, especially because I've also been hearing talks about how Canadian crude, just like shifting Canadian crude from one part of the country to another, could also be impacted by the U.S. tariffs, if considering pipelines that go through the U.S. So I don't know if there's going to be certain specifications of the contract that sort of bond that crude and which allowing it to not fall under the tariffs. But if not, yeah, then domestic Canadian producers will also just like, for their own crude will also need to pay a lot more, which isn't great for them.
Yeah. I mean, the topics of tariffs are not just obviously on crude oil, Mexican or Canadian, but we're now talking about reciprocal tariffs that Donald Trump wants to implement vis-a-vis partners who have tariffs that are higher than what the U.S. imposes on the import of their goods. And I think, was it yesterday or this morning, that we're now obviously having the idea that we may have a 25% tariff imposed on the European Union.
Yeah.
So I suppose that when it comes to like tariffs used as foreign policy or tariffs used as economic policy, that kind of leads us into question marks. And I've seen some of the analysts hit on this point, but it was strange that not too many people went into the whole, tariff escalation. What does this mean for global oil demand growth? Most people are seeing oil demand growth between 1 to, let's say, 1.2 million barrels a day this year. And, there are downside risks. Have you come across any concerns when it comes to global oil demand? Because at the end of the day, if these tariffs are imposed and if people's expectations of demand are reviewed lower, it's going to change the balance. And of course, that complicates matters for OPEC Plus, as we'll talk about, who wants to return barrels to the market. So was that sort of, swept under the carpet amidst all the other things, or did that pop up in conversation?
No, definitely it did. In terms of the tariffs itself, petrochemical demand was talked about how, in general, Northeast Asia's naphtha appetite has been stagnating over the past few years. And now if we have tariffs that affect the industry even further, cutting through margins in Northeast Asia and Northwest Europe, but especially Northeast Asia, that could significantly impact naphtha demand again. And we've spoken about this in a previous podcast, but yeah, I think that was something a lot of people were talking to me about as well, which I think it was interesting. I think it was good to see so many people talk about this, because Northeast Asia it's just such an important market for the petrochemical industry. The other aspect of demand a lot of people were talking about was road fuels out of Asia as well, with the EV penetration. That's not so much tariff on crude right now, but more so a shift that everyone's seeing, just like a push towards EVs in China especially.
So the EV story, that popped up here and there when people were being China specific. Some of those that were kind of taking a step back and looking at the macro picture, saying, well, what does reciprocal tariffs mean? And what does 25% tariffs mean on the EU? Because not all EU countries are equal, and they're going to obviously respond differently to one uniform level of tariffs. But, I mean, we have demand implications, we have obviously supply implications that are being discussed. All this kind of leads to discussions around what OPEC is going to do. And so it's scheduled anyway to return barrels incrementally, about 120 KBD in April to the market. And I think people are having doubts as to whether it's in a position where it is going to follow through. So we could maybe have a fourth delay in the return of barrels. When you asked people, what was their view?
I think everyone agreed that everyone's seeing a fourth delay coming. At least the people I spoke to, so I can't just blanketly throw around everyone. But no, that is definitely something a lot of people are expecting. They don't really see any reason for OPEC to bring in the barrels right now. A lot of people have been talking about market share, but with Brent at 73, at 72 this morning, I don't see a lot of people just don't see any reason for them to bring that. Those
Vincent,
barrels in.
did you meet any OPEC cheerleaders along your way that indicated that somehow the producer group was going to follow through on the schedule, or just like Mita was pretty one-sided?
To be fair, it was pretty one-sided. Even perhaps the OPEC cheerleaders would be more bullish, would believe that it is in their interest to delay the barrels. The question now becomes, when do they actually bring back the barrels back to the market? I've heard things from summer this year to even summer next year.
Yeah.
And yeah, we're talking to that same guy who I believe
The
was
guy.
The guy.
Some people were speaking their bullish books. But yeah, it just depends on when they bring back barrels, and also it's like saying that they've told the markets that there's a plan to taper to slowly bring back barrels to the market, and the question becomes like, what happens with their there's a credibility thing as well, talking about a reputation. That's different sentiment, but it's like you're saying you're doing something, but you're not doing it. But then you also need to look at the realities on the ground. Flat price is in a weak environment, so they sort of need to delay it to prop up the flat price.
Yeah.
Yeah, I mean, honestly, a lot of people I spoke to say you could argue the balance and whatever your balanced view is versus what theirs is. But at this time of uncertainty and with prices being in the low 70s, does it actually make sense to budge without knowing whether Iran is going to be hit or not by sanctions, whether or not Russia, not that Russia is necessarily going to produce more as a result of the end to the war in Ukraine, but there could be implications in terms of optics for the market and sentiment. At this juncture, where's the rush, right?
Yeah.
And so I think most people just simply say they stay put, see what happens, see what tariffs Trump imposes or not, how quickly we progress in terms of the sanctions regime, and take it from there, I think. Now, to finish off on some of the themes, I think just to go a little bit more micro and product specific, I heard a lot of talk about on Dangote and the ramp up of the massive Nigerian refinery. And of course, that ramp up is going to be predicated on whether or not it secures the crudes that it needs, whether it's from the US or domestically. And I didn't find a clear consensus as to how people saw basically the RFCC, or the gasoline producing unit, ramping up to full capacity. Has there been any consensus in terms of what you have been talking about? I mean, the concern is there, right? You've heard this too, right?
Definitely. I think anyone I've mentioned the word Dangote to has replied with, yeah, if it works. I think that's what everyone's been worried about. So definitely, like I've heard, we've all read reports of how it's got, like Nigeria now has the ability to produce its domestic demand. It doesn't need European gasoline. And obviously that is a massive bear spell for EBOB. But just recently, we also saw EBOB cracks supported because they were supplying gasoline to West Africa, because Dangote's RFCC wasn't working. So I think that's just something the market is concerned about. That's just something they're expecting to see, to see it continuously be in maintenance. Some people mentioned to me that Dangote was supposed to be fully functional last year, and we're still seeing these periods of it going up and down. So I think that's something a lot of people see more in the long term. That could bring a bear spell for EBOB, but right now, at least, I don't think a lot of people. I think it's great optics, but a lot of people don't see it. Like a lot of people do see support for European gasoline, just because we're still sort of waiting out on all the clunks and just like the maintenance periods for the Dangote refinery.
Mm-hmm.
And Vincent, that was your impression too?
Yeah, very, very similar. Like Mita said, it's like Dangote refinery. It's good and all if it works, if it's at full capacity. So, of course, without operating at full capacity, this has contributed to a lot of upside pressure in refinery margins, the cracks, especially the gasoline cracks. So it could be a matter of like if and when things start running at full capacity, that would be very bearish. I've seen in some presentations, companies have been forecasting like a $2 or $3 drop in these gasoline cracks. But also I've heard opinions that with a lot of European refineries closing down, then that will increase the diesel deficit in Europe, but also maybe offset the rise in not only the Dangote refinery finding coming online, but also other new super refineries coming online too.
Well, I mean, I think it really hinges on, as you guys were mentioning, when does that RFCC unit, when is it fully operational or at full capacity and running on a regular basis? Again, really depending on crude procurement, but it presents an interesting trading opportunity, and with a very binary outcome, because a lot of people have Dangote running at, from a crude throughput perspective, around 450 KBD. It's a 600 KBD refinery sometime in the summer. If they beat those expectations and the RFCC is working, then those who are looking to go long cracks, whether it be long EBOB or long RBOB cracks, may be in for a rough ride. On the other hand, placing too much certainty on the timeline, as given previous experience ago, while I'm shorting the cracks wherever I can, is also a difficult proposition. So I don't know if the seasonal trade is going to be working out for either one of these perspectives. If you could stay in the trade, maybe it'll work out for you, but you'll probably see a lot of seesaw around that.
Sure. The seasonal trade's also going to be affected, sorry for circling this back, but with the tariffs, we have to see whether the RBOB, EBOB differential, like how profitable is the RB even going to be if the tariffs are just that significant. So I guess there's just so much uncertainty for this summer.
Well, if you compound the two, let's assume that Dangote, and again, the question is also above and beyond that, there's a natural expectation that Dangote is going to be directing its output of gasoline towards the local market and neighboring West African markets, which then raises the question of where would Europe's surplus in gasoline go? So Vincent mentioned obviously the planned closures this year, and so you're taking down some capacity, and that works towards reducing the surplus of gasoline in Europe. But at the same time, we've got such an enormous project that could really deliver. And so there's going to be competition in being able to place your gasoline. And if you can't place it in West Africa, you're going to try to place it in the US. And if you're tariffed, you're going to really have to discount to get that supply push effect and get it to the US. So that could mean some significant transatlantic ARB premiums that develop, not necessarily because the U.S. is strong, but Europe has to discount a lot. Yeah. Well, that was a tour of some of the things we heard this week. We could go on and on and on, but we're going to move on to our usual crystal ball moment. And so this morning, just above $73. Every time we look at this, where will we be at the end of Q1? Are there reasons to be bullish price now that we're in the low 70s? Do we get a sort of technical rebound? Do we get Chinese refiners propping up the market at these low levels of Brent? Or do we stay where we are? Any thoughts for the end of this quarter? Now that you've heard all that you've heard during IP week, have you changed your mind since last time we've done this?
I think I'll be sharpening my bullish horns once again.
They're getting longer again.
They're getting longer. A lot of people do like to be bullish on crude, and there are good reasons for it. Of course, not only because we see crude will have technical support at the low 70s level. That's a crucial level of support. A lot of people say if it falls below that, if it closes for a few consecutive days below 17, then that it's a very bearish sign. But we haven't seen that yet. We expect OPEC to delay bringing back barrels, and I've also heard people say that actually with Trump threatening these maximum sanctions on Iran, also on Venezuela, then that provides a safety valve for OPEC to, as in terms of lifting the fat price.
Should they have their barrels back in? Yeah.
Yes, and also that Brent spreads, the backwardation is at relatively low levels, as well as we're in an environment of low crude stocks in general. So people might be positioning for summer, for seasonality with potential supply disruptions. will give a lot of upside pressure to crude. So perhaps pricing for these event
Do we
scenarios.
go all the way back to 80, or do we just sort of settle in the mid 75, where, because we're in the low 70s now.
Mm.
So we're bullish $2-3, or we're bullish, up to $8.
I think bullish up to $8 going towards the summertime.
Okay. Mita?
So I was making like a bearish versus bullish list in my head, and and like on the bearish side, we've got demand, which I'm still not convinced by, and we've got refinery maintenance going just like in the short term, which should be bearish crude. But on the other hand, there's so much uncertainty, as Vincent has correctly pointed out. I do think OPEC is going to roll delay their cuts, delay bringing back their barrels for a fourth time, which should provide more support. So I don't really see us going below 70. And if we do in the 70, 71 region, I do think we're going to have price sensitive buyers come in from China. I think that should also support prices for a bit. And on the topic of the tariffs again, if we see a disruption in supply, let's say in PAD 2 refineries from Canada, these refineries are dependent on medium sour crude. A lot of people were thinking of maybe, not anticipating, but they were sort of speculating on whether we'd have a deal with Venezuela to get that supply, but I don't see that happening either now with the new licenses and what's
bottom
happened.
line, where are you at?
So bottom line, given all of this, I think I do see some short-term support, but not towards 80. It's more towards 75, I think. Maybe a bit higher, but I don't see us going towards 80.
Yeah, obviously there are a number of considerations, and that kind of reminds me of the old joke around President Nixon. I think it was attributed to him, where he used to go, "I'd like a one-handed economist." And they asked him why, because the economists would always say, well, on one hand this, but wait a minute, on the other hand that. So I'm just going to use one hand and say that we're in a low vol environment. Realized vol is sunk below 20%. The market is obviously taking things in stride. And if we continue on a low realized vol, then the day-to-day moves in the prices of oil should mean that we settle in the 70 to 75 range. Now that's flat price view for the end of the quarter. What I think is certainly interesting is that you may not get the move in the flat price that you'd want fast enough, right? But on the other hand, as Vincent pointed out, expressing the bullish view off these lows may be better expressed through spreads. Mm-hmm. So if we want to go long oil based on everything else we said, and if our viewers, agree with our opinions, then this is the sort of thing that I would be going long spreads either at the front or doing a June deck or if I want to take it a little bit easier, doing being long deck spreads and just waiting to see what comes out of a potential bounce back from this critical support level at 70. So with that, it concludes the podcast. Thank you everyone for joining us today. Until our next episode, as usual, don't forget to smash that like button or slap it, whatever your preference. And we'll all see you again next time. Thank you very much.